Yeah, welcome to another video. So in today's video, we'll be looking at non-for-profit making organization. Now, from our knowledge on single entry, we are still going to apply that in non-for-profit making organization. So when we are talking about non-for-profit making organization, now let's look at societies, clubs, organizations. All these society club organizations, they are not created for the purpose of making profit. So that's why it is called non-for-profit making organization. One thing there is that they are not created to make profit. That is, no profit motive, and also what the activities is for the general welfare of their members only. Do you get it now? So when you are to define this now, just put it that these are organization, club, society that are not created for making profit, but to satisfy or provide the general welfare of their members, to satisfy the general welfare of their member rather. We are now talking about the features. As I said, from the definition, you can bring out some features of non-for-profit making organization. So these are notes on non-for-profit making organization. The number one features there is that it's not created to make profit, right? Also, contributions or the money used to run the organization is from members' contributions, because the member are going to pay subscription or annual dues and so on like that. So this will lead us to the sources of income. The sources of income for non-profit making organization, as I stated earlier, number one is subscription. Number two, we have annual dues, we have fines, we have entrance fee, and we have some special cases, special events. Let me name that special event. So that special event, sometimes it may be annual feat or annual dance and so on like that, whereby they are going to collect money, and we have sales of tax and all there are still many sources of income for non-for-profit making organization. After knowing this, one thing you should know is the account that is prepared under non-for-profit making organization. And let's start with the first one. The first thing to do is that for not-for-profit making organization, it is similar to that of single entry, because a specialist, an accountant, a certified accountant is not employed to make to record all these transactions, because most of these transactions are being recorded by their secretary or financial secretary or treasurer. Do you get it now? So that's why this will lead to single entry, whereby it does not follow the dual concept of our accounting concept. The dual concept does not follow it. Double entry principle is not applied. That's what I mean. Now, as I said earlier, the first thing when we are dealing with single entry, don't forget we start with statement of affairs. Same thing apply to this. We are starting with our statement of affairs. Statement of affairs. And as we all know, the statement of affairs is also known as balance sheet or statement of financial position. But right here now, when you are dealing with single entry and not for profit making organization, it is called statement of affairs, no longer called statement of financial position. Now, this statement of affairs, we use this to determine our capital, right? And we said capital, from the accounting equation, we said capital is equal to assets minus liabilities. But when we are now dealing with non-for-profit making organization, it is no longer called capital. It is now called accumulated fund. Therefore, this capital, we are going to erase it. I just wrote the capital there so that I can recall back to our accounting equation. So in non-for-profit making organization, is called accumulated fund. So you get your accumulated fund the same way. Your assets, you write out your assets, you will less your liability, then the result is the accumulated fund. Now let's look at example what I'm trying to say about this. Your statement of affairs. For the statement of affairs, don't forget you are going to write as at the date, right? And so on like that. because we don't want to waste enough time. So the assets, we are going to be using the vertical format. The assets, if you have like furniture and fitting rather, we have building and land, we have equipment. The amount is going to be written here. These are the amounts, so the total amount, then less current liabilities or your liabilities, long term and current liabilities. That's everything. So we have like creditors, and part of the assets we have cash also. You can add that to it. And so payables, maybe like rent payables. So when you add this up, the result you are taking it to this place, then you put it inside bracket. When you put it inside the bracket, it simply means that you want to deduct. So subtracting that, your result is called accumulated fund. So this is the vertical format. We are no longer using the T format. So when you are advancing, you start using the vertical format. So you can also use the T format. It's still the same process. Now that's the first one. The second account we'll look at is the income and expenditure account. So for the income and expenditure account, when we are dealing with our trading concern, that is trading profit and loss, statement of profits or loss and other comprehensive income. Our P and L, which is the profit or loss, right? And we use that to determine our net profit, is the same as the income and expenditure account. That is, this income and expenditure account, when we relate it to a trading concern, is the same thing as profit and loss account. So profit and loss account is now called income and expenditure account when you are dealing with not for profit making organization. Now when you are dividing this, the definition is simply, this is an account which shows the summary of all income received and expenditure incurred. Income received and the expenses incurred. And according to trading concern, I said it earlier, the same thing as profit or loss account. So this income and expenditure account is on accrual basis. I hope we still remember the basis of accounting. Accrual basis, that is, we can carry out adjustments the way we used to carry out adjustments in our profit and loss account. We can carry out adjustments in our income and expenditure account. Also, income and expenditure account is known as nominal account. So these are the key points you need to know. It is known as nominal account. Now let me show you an example on income and expenditure account. So for income and expenditure account, it's going to be income and expenditure account for the year ended. So I don't know the date. Any date you want to put, you can just put 31st December 1950. Now, for your income and expenditure, using the vertical format, you are going to start with your income. Starting with your income. So what are the income? Income is you can see the sources of income. So all this can serve as income for the non-for-profit making organization. So example, we have subscription. We have donation. I didn't write donation there, so donation is among. We have fines and so on like that. So the amount is going to be transferred to this place. Then the total you are going to have it here. After that, you are going to less your expenditure. For the expenditure, sometimes you may pay for rent. So you have rent, you have salaries, you have insurance, and so on like that. You are going to add everything up. When you add everything up, you are taking it to this side also. Then you less it. So when you are subtracting, I said it earlier, just put the amount inside brackets. Then your result, for instance, now if the income is greater than the expenditure, that is, the amount here is bigger than this, It simply means that we have a profit, right? So it is no longer called net profit. It is called surplus. Therefore, adding it to the income and expenditure account when you are explaining it, you can also say that the balance in income and expenditure account, when the income is greater than the expenditure, it is known as surplus. But when the expenditure is greater than the income, it's called deficit. So for this is surplus, or it may be deficit or deficit. It depends. Now, this for the income and expenditure account. The third account we are going to look at is receipts and payment. The receipts and payment account. Let's look at this. For the receipt and payment account, receipt and payment account is the same or similar to cash book. So cash book is now called receipt and payment account under not for profit making organization. So when you are dividing this, you can say that it's a summary of all cash received and all payments made. So it shows the actual cash you received and the payment made. The same thing as cash book. Cash book shows the actual cash received and the payments made. Now for receipt and payment account, it is on cash basis. So you receive cash. When you receive the cash gangan, that's when you are going to record it. And when you make payment, that's when you are going to record it. So it's not on account basis but on cash basis. Now the balance brought forward, the balance at the beginning represent cash in hand at the beginning, while the balance at the end, the balance carried down, balance brought down is represent the cash in hand at the end of that period. Do you note that balance brought forward is the cash in hand at the beginning, balance brought down is the cash in hand at the end, and this is the receipt and payment format, also using the vertical format. So for the vertical format, all money received, all payments made, and so on like that. And also, one thing you should know that when you are talking about the account, receipts and payments has capital and revenue accounts, while for income and expenditure, it is just revenue account. Know that. Sometimes all those are OBJ questions. Now, another account we are going to look at is we are going to look at how to solve question subscription, how to solve some subscription question, subscription account. So for this subscription account, when we are talking about subscription is simply the amount the member of a particular organization, all this not for profit making organization, paid or contribute during a period of time. So the amount contributed in a fixed period of time is known as subscription. Now this subscription will sometimes the member can prepay, that is can pay in advance, and sometimes the member may be owing, may not pay as at when due. Now we are going to look at that and how to make some necessary adjustments. Now here is the problem. As I said earlier, sometimes the subscription may be in arrears and it may be in advance. When we are talking about subscription in advance, let me repeat myself again. So subscription in advance is trying to tell us that the members are paid in advance. They are paid the amount which is not for this year but for next year. They are already paid this year. So subscription in advance, is it a current asset or current liabilities? So let's look at that also. For subscription in advance, it's not for this year, right? It's for next year. This simply means that the customer, the member can ask for it at any time since it is not for this current year. So it is a liability to the organization. Do you get my point now? Because subscription in advance is not for this year, it's for next year. So when the member paid in advance, the member I still have some obligation, right? The member can still come and collect the money back since it's not for this year. Therefore, it is a liability to me since I have not yet provide the, how will I say it? When we relate it to maybe service now, I have not yet provide the service, but the person have paid. Let's relate it to that. It simply means that I have an obligation, right? Since I have not yet provide the service, but the person has paid, it is a liability to me. Therefore, subscription in advance is current liabilities. But when we look at the other one, which is subscription in arrears, that is owing, it is current asset. This simply means that the subscription has been due, but the member is yet to pay. When the member is yet to pay, the members they have obligation to pay, right? I can still demand for the cash from the person, which simply means that is an asset to the organization. So subscription owing, arrears, anyhow you want to call it, is a current asset. Now let's compute this. So these are some problems you may come across when you are solving question or not for profit making organization. Now for my receipt and payments, I said receipt and payments is similar to cash book. So let me write solution. I just love writing solution. Now instead of, okay, I wanted to use the T format, but let's use the vertical format. Subscription in subscription account. Now we are going to start with the cash. The amount in our receipt and payment is 25,000 naira. So the subscription you received in cash, that is it. Now let's look at it together. We have subscription in arrears and we have subscription in advance. So this is at the beginning of the year, this is at the end of the year. But we are to write off the subscription account for Rangers Club for the at December 31st, 1999. So this subscription account is for December 1999. I should have written it there, but when you are in an exam, you need to write the name of the organization, then you write the date. Note that. Now we have written out the cash. Let's make the necessary adjustments. Let's start with subscription owing at the beginning of the year. Don't forget the account you are preparing is for this year, right? So you are owing subscription 1,000 at December 1998, but the account you are preparing is for 1999. Don't forget you are owing, right? The amount is not for this year, the year that we are preparing for is for last year, which simply means that the subscription owing at the beginning of the year is not for this current year that we are preparing for, which is 1999. It simply means that we will need to subtract it since it's not for this year. Anything that is not for this year, subtract it. Anything that is for this year, you add it to it. That's the logic. So subscription in advance, I'll just write owing balance brought forward. So owing at the beginning, balance brought forward, which is 1,000 naira. You are going to subtract that. Anything that I put inside bracket simply means you are going to subtract. Now let's look at subscription in advance at the beginning. So when you make an advance, you paid in advance as at 31st December 1999. Don't forget, advance is not for that year, it's for the next year. Do you get the logic now? It's not for that year, it's for the next year. So you paid in advance 31st December 1998. It's not for 1998, but it's for what? 1999. Which simply means that, and as I said it earlier, that when it's for this year, you add it to it, but when it's not for this year, you subtract it. So since at the beginning it's for this year, because it's paid in advance, we are going to add it to it. We are just going to write prepaid balance brought forward, which is 750. So you're adding it to it. So that is how to do the necessary adjustment. Now we'll look at subscription in arrears at the end. So you are owing at the end of December 1999. It's for that year. That's the amount you are owing in 1999, right? And we are preparing for that year, right? So we are going to add it to it. Anything for the year, you are adding it to it. Owing brought down 1,750. Now let's look at subscription in advance. Now for 1999, December 1999, you made a subscription in advance. It simply means that it is not for year 1999 because it's in advance. That is for the next year, which is 2000. So it's going to be for 2000. And when it's not for that year, I said it earlier, we are going to subtract. So we have prepaid brought down, which is 600. We are going to subtract that. Now, what is our answer? So we have 25,000 naira minus 1,000 naira plus 750 plus 1,750 minus 600. So that give 25,900. So this amount 25,900 is the subscription that is going to your income and expenditure account. Income and expenditure account. So this amount is going to your income and expenditure account. Now this is how to solve problems for subscription. Now let's look at the balance sheet and trading bad trading account, because sometimes not for profit making organizations sometimes they engage in some trading activities. So it's not that they sell the goods to their members. No, they don't sell to their members, but they sell to the people, anyone that is not their member. Those are the people that they usually sell to. So all this trading activity is for them to accumulate more wealth, that is to make more money, so that they can use that to run their organization. So that's why they mostly call it bad trading account. Now let's look at that. As I said earlier, sometimes an organization may engage in trading activities. That is, they may have a bar, and in their bar they start selling drinks to people that are not among their members. You get it now. So all those things is to accumulate more wealth. Therefore, we will need to prepare a statement of profit and loss, which we call bar trading account. So the bar trading account is called the bar account. You can call it bar profit or loss account for the year ended so dates. And this is prepared similarly to our trading statement of trading profit and loss. So it's the same thing with our trading profit and loss account. And the last part under this non-for-profit making organization is your balance sheet, which you can call statement of finance. Let me name it statement of financial position. Statement of financial position. So for the statement of financial position is the same thing. Now let me just draw a fast format for the statement of financial position. When you're having the statement of financial position, as at the date, do you get it now? So as at the date, let me write it in full. As at 31st December 1995. You are starting with your fixed asset. Fixed asset is now called non-current asset. Don't call it fixed asset anymore. It is called non-current asset. Non-current asset. Example is equipment, and also we have equipment, buildings, motor van, and so on like that. If you have a depreciation, if you are giving depreciation, you are going to subtract it from the normal cost. Then the next book value, that's what is going to be there. So all this you are going to add it up. Then we have the current assets. Current assets. Current asset like cash in hand, cash at bank. Then we have inventory. Stock is called inventory. Note that. So all this and so on like that. The amount is going to be added together. Then we have our current liabilities. Or let's just transfer the amount to this place. Okay, let me put it here. I'm thinking of taking it to that side, but let me stay the same. Now we are going to have our current liabilities. For the current liabilities, we are starting with creditors or payables and so on like that. So that you know waste much of our time. Now for this now, you are going to subtract it less current liability. So when you subtract this, the amount you get, you are taking it to this place. So you are going to add this up. The total is going to be written here. Then you close the account. After that, this is going to be financed. We are going to have financed by. Financed by. We are starting with the accumulated fund. I said it's no more called capital, but accumulated fund. Then we'll add sometimes if you have surplus, you are going to add it. If it's deficit, you are going to subtract it. Don't forget surplus. Then you less drawings. because if there's not enough space, we need to manage this. We are going to start with this first. So the amount, we are going to transfer it here. Then when you will left our drawings, we are going to have this. So the amount you get, which you use to finance, must be equal to the amount you got here. That is, don't forget, non-current asset plus current assets minus current liabilities is equal to your equity. This is our equity, the amount we use to finance it, and that is all. So this is just an introduction to non-for-profit making organization. I will have looked at all the necessary things you need to know under non-for-profit making organization. I have explained everything: statement of affairs, income, receipts and payments, subscription, bank trading account, balance sheet, what non-for-profit making accounts means, the features, the sources of income. So these are all the things you need to know under non-for-profit making organization. Thank you for watching. Please don't forget to like, share and subscribe to my channel. Bye.